Good morning all, and welcome to today's webinar here at East Capital Group. My name is Marcus Ragmark, and I work as part of the investor relations team here in Stockholm. In today's webinar, we will zoom in on East Capital Group's recently released Sustainable Investment Report and also discuss the key themes shaping the sustainable investment agenda. As such, I am delighted to have with me East Capital Group's co-founder, partner, and not least Chief Sustainability Officer, Karine Hirn, with us from Hong Kong. Welcome, Karine.
Hi, hello everyone.
As the Chief Sustainability Officer, Karine is of course instrumental to the group's sustainability work, including the completion of this Sustainable Investment Report. So over the next 30 minutes or so, Karine will share her key insights and findings from completing the report and also share her thoughts on the many issues and questions sort of facing the sustainable investment world today. So I'm sure it will be an interesting session. So with that brief introduction, let us dive straight in. So one part of the report sort of focuses on the importance of proprietary ESG frameworks and tools. And at East Capital, we really emphasize the importance of developing proprietary ESG tools rather than relying only on external data providers. So Karine, if you could just comment on the key motives behind this and also how it sort of serves to distinguish our ESG analysis and integration.
Yes, indeed. I think the main reason is just that we actually think that external ESG data providers do not really add value to our investment processes. And this started quite early on because we realized that given our coverage specializing in emerging markets and frontier markets to start with, we looking at what external data providers could give us, the coverage was pretty poor, was quite patchy. Then we also realized that a lot of these ESG data providers actually focus on more on a like kind of a tick the box approach, focusing on for instance, whether or not a company has a policy in place, not necessarily what the actual practices are. So this is actually an issue when you invest in companies in emerging and frontier markets, because many of these companies are quite early on in their sustainability journey, and that means that they might not be focusing on actually having policies. So when you look at an external data provider, it might give you a completely wrong picture of actually the standards of a given company. One other aspect of this discussion is that when we are doing this by ourselves, it brings us a lot of insights. It gives us a completely different dimension, I would say, or in-depth in our analysis, which then helps us really identify what are the weaknesses of the company in terms of environmental, social, and governance standards. And then once we have identified these weaknesses, basically we approach these companies by engaging with them and trying to make them improve. So and of course another dimension is that this work is actually done by the investment team themselves. It's not me as head of sustainability who is actually doing the work. I do spend a lot of time calibrating the quality of the analysis and making sure that we are doing it in a diligent way and so forth, but this is really the analysts and the portfolio managers who do that, and they get a lot of insights as well. So one of the last things we added recently as well, which I think we might get back to this during today's webinar, is we added a momentum score. That's also one aspect that you don't really have in any external data providers, because the analysis of the external data providers is very often just basically how it looks now and maybe the track record, but there is very little perspective. We want to be prospective. When we are doing ESG, it's about making investments. So we want to know the direction of the travel for these companies.
All right, thanks for that, Karine. One example of a tool that we've developed at East Capital Group is the SDG value chain analysis tool. So if you could just elaborate on that tool in particular and how we apply it internally at East Capital Group.
Yeah, with pleasure. This is really one of the highlights of for us at East Capital and in this report, and it's been described quite thoroughly. The tool itself actually became a case study by the United Nations PRI because they thought it was so clear and they really liked it. So it's also available on the PRI website. So basically, when I was mentioning the fact that we introduced in 2016 for emerging market companies this ESG scorecard, and then in 2017 we added what we call the SDG model, which is basically a way to check and assess the alignment of companies in terms of their revenues when they are helping or the other way around, having a negative impact on these sustainable development goals. But the problem with this, or the shortcoming of this tool is that basically it's actually quite subjective, and except for the most obvious companies, like if we would have, for instance, a education company or pharmaceutical company, then you can say that it's related to a specific SDG. But there are many companies where you would not be able to really find this revenue alignment. Secondly, it does not really also represent the true SDG impact that we believe is to be found in the value chain of the company, not only in what their main revenue and main business is about, but basically both on the supplier side, but also on the consumer side. And then having this lens also means that you basically really, it's kind of pushing investors just towards quite a narrow selection of solution providers, and many of these companies are often quite stretched in terms of valuations. And here again, this is about investment, so we want to find companies that might not have been detected or identified by all the other investors. So we last year developed and then implemented full on for all the portfolio holdings of our fund called East Capital Global Emerging Market Sustainable Fund, this new tool, this SDG VCA. One of the major positive sides of this tool is that we're actually using SASB. So SASB stands for Standard Accounting, Sustainability Accounting Standard Board. They have developed standards, which basically means that they have been mapping SDGs towards sectors. And then they've also developed metrics. So we use this tool that SASB has developed, and we identify the two most important sustainable development goals for companies depending on the sectors. And then we assess how the companies have been doing, again, across the value chain, both backwards, looking at the last 1 to 3 years, but also looking at the next 3 to 5 years. So I'm back to this importance of being prospective in our view. Then we apply like a 5-point rating system with basically saying, is the impact like strong positive, weak positive, neutral, weak negative, strong negative. Then we use 4 principles regarding materiality, intentionality, additionality, criticality to determine the impact a company has on these SDGs. And then we get a score. So the overall score is really helpful because we've been using it in our portfolio allocation. So we've been able to actually remove or reduce the weight of some of our portfolio holdings where we felt that the impact was not as strong as we would have expected it. And we're also comparing to the price and the valuation of the company. And it's been really, really, really helpful. Maybe it does sound a bit complicated when I'm explaining this way, but I can tell you that it's been bringing us first. It's actually quite simple. That's why we like it. It takes quite some time to use it at the start, but now we have developed a real good understanding of it throughout the team, and we'll be very happy to present it in more details to anybody who is interested, as we're really proud of this tool.
Thanks, Karine. Sounds great. And as Karine mentioned, this particular tool was included by the UN PRI in a case study, which is of course great to see. Another part of the report which really struck my mind was a statistic that last year, so 2021, East Capital Group engaged with as many as 117 portfolio companies with engagements totaling almost 200, so 197 different engagements. So on that note, one regularly discussed question in the sustainable investment world is, of course, that of divestment versus engagement, where at East Capital Group we're very much supportive of the latter, so of engagement. Can you share your own thoughts on this particular question, the importance of engagement and the power it can have when done properly?
Yeah, so that's, engagement has already been really a key to the way we work and the way we see sustainable investments. One of the reasons we have so many engagement is also because the work is also done by mostly by the investment teams compared to other asset managers where they would have dedicated maybe engagement team. So the work is really being very in close dialogue with the companies we invest in. We do, of course, exclude, we exclude companies coming from specific sectors which we do not find sustainable, such as, of course, weapon manufacturing, pornography, and commercial gambling and so forth. But once we've removed these sectors, we actually really believe that the actual shaping of outcome, which is really what matters when you think that you're working for positive change, the shaping of outcome required this mindset that is more a mindset of an owner, of a shareholder, than an investor. Because you need to be really long-term. This engagement actually, they take time, but they also need to be seen on a multi-year process. There are very few engagement which are short, and that is the reality of anybody who works with that. It also requires, of course, actual cooperation from the companies you engage with, because some companies, if they are not ready and not willing to improve, it's going to be really hard. So it's also part of our work when we are identifying these weaknesses through our ESG scorecards to actually find out which are material issues that we want to address and what is our chance of success. So we have a very thorough process in the way we identify engagement possibilities and how we monitor this engagement. We log them into a special software, and we have this reporting as well internally and externally. But really, our conviction is that there are a lot of issues in the world, obviously, as we all know, and unfortunately, somewhat, especially in 2022, it seems that these are more accelerating than decelerating, and divesting solves very little. For instance, divesting, when it means that even if you push, for instance, a company to divest from the most polluting assets, if we think of in terms of for instance, environmental issues, if they sell these assets to another owner, which is not, for instance, within the public equity markets, or which is more, obscure and won't say anything about the way they're using it or what they're going to do in terms of these assets, it's unfortunately going to be worse. It's not going to be better. So we really think it's important, and we also, as I was mentioning, this attitude of thinking we are owners more than we are investors, and part of that basically is reflected in the fact that we nominate independent directors to boards of companies. This is on the emerging market side. So on average, every year between 8 and 12 independent directors to boards of companies, mainly in Eastern Europe so far. That's also really important, and that's of course a very important engagement. First, to actually get somebody on the board, but then to make sure that the board work and strategy is aligned with our ambitions and objectives.
Good. I think these are all really strong arguments. So thanks for sharing. And again, I think important to distinguish us as an owner rather than merely an investor. We touched upon the case study there from the UN PRI, but our group, so East Capital Group, has received significant media attention also from other institutions for our leading role in ESG analysis and integration. If you had to highlight other achievements in this domain, which would those be?
Well, we already mentioned the PRI SDG VCA analysis article that was published on the PRI, and that was really, for us, we're very proud of that, and it's going to be translated into Chinese. I presented it for Chinese signatories 2 weeks ago at a conference, and I also know like the signatories in South America were also very interested, so that's very exciting. Other tools that we are very proud of is what we developed for to assess actually climate transition risk on the emerging and frontier market side. Here again, why we're proud of it is because it's bringing insights to the team. It's not done by anybody else but the actual analysts and portfolio managers, and it has been very helpful in driving the conversation on related to greenhouse gas emissions for and general transition risk for companies in our teams with the companies. We last year as well, and it's described in the report, we were very successful in our campaign coordinated by the CDP for, it's called the non-disclosure campaign. So basically annually CDP, which is an investor-led organization, targets companies around the world and asks them to fill information about environmental, so climate change, forest, water, into a database that we can use then as investors to assess companies. And we were extremely successful. We targeted many companies, and 61% of all the companies we targeted actually did reply to the questionnaire. So that gave us a prime place in their annual report of the for the campaign, where we explain as well the way we did it and why we were so successful. So happy to share more about that, and it is in the report. And we've also had like tangible achievements in with many of our companies. One of the case study in the report is about CCC, which is the largest footwear producer and retailer in Eastern Europe, and one of the fastest growing footwear retailer in the world. And there's a lot of details, so and I don't have the time here, but basically, we were not very satisfied with their first sustainability strategy that they published in 2019. This company is in Poland, and we started with a letter to the board. We had a lot of discussions with different representatives, with their board members, CEO, head of sustainability, and then through all our efforts, they understood that it was also not sufficient, so they updated their strategy to target an emission reduction of scope 1 and 2 by 80%, of 80% by 2030, and with also other sustainability objectives, by the way. And these new targets, just as a, to explain that, show how much it means. They imply a reduction of 890 kilotons of greenhouse gas and emissions, and that's basically equal to almost 150% of the current Swedish greenhouse gas emissions related to footwear consumption. So this is one of the achievements that we are really proud of, and we keep working with this company because we can still push further.
Thanks, Karine, and great to hear about that particular case study there as well with CCC. The Sustainable Investment Report then, sort of referring back to that, covers all of the group brands, so East Capital, Adrigo, and also Isperia. So given East Capital's are more than 25 years of active ownership experience, company engagements, which we just talked about, and really working for positive change, can you comment on how we're now looking to share these best practices also to younger brands such as Isperia and Adrigo?
Oh, absolutely. I mean, this is one of the most exciting parts of our work right now, everything we're developing. And I think without going too much into details, we have the same belief that proprietary tools and internal research brings much more insights. And once you bring insights to the portfolio management team, they get the insights themselves, they will become better investors. So that is really, the approach is the same. So we've both Adrigo and Isperia have implemented and rolled out the same analysis that we call the red flag analysis, which is like key questions to address and assess all our holdings on according to. So that's really important. We also have the same approach of being like, the long-term mindset and the mindset of an owner and not of an investor. We do the same kind of work related to pushing companies for better disclosure. For instance, in the case of Adrigo, which is a long-short Nordic hedge fund investing into smaller companies in the Nordics, you also need a lot of work there to help companies understand how important it is to disclose information for all their shareholders, including ourselves, to be better, to better assess the. So this is all working in the same direction, which is working for positive change. And then there is another thing I would like to mention, even though it's not as such a younger brand, but it's Capital Real Estate, which we've been working with for now, many years in investing in commercial properties in the Baltic states. There, and it's described in the report, there's been a lot of work being done, and there's still a lot of work that will be coming. But we basically, we now have 78% of all our portfolio holdings that are either certified or, portfolio assets and buildings which are certified or in process for receiving a certificate for BREEAM. We also launched a solar project in one of the logistic properties. We also, we introduced the first tenant satisfaction survey, which is really important for us to be to better understand what the expectations are. And we also introduced the Global Real Estate Sustainability Benchmark, GRESB, for the first time. So a lot of work, and there will be more coming.
Exciting and good to hear. Moving on then, I know in the report we also touch upon the tragic events unfolding in Ukraine and really condemn Russia's invasion in the strongest way possible. And as a large and experienced investor in Russia, it's of course been a major setback to our long-term mission of working for positive change in the region. Can you just elaborate on how the war has impacted specifically our long list of engagements in Russia, and also your thoughts on how this may develop moving forward?
Yeah, thank you for addressing this really important topic, and I think the way you presented it was really spot on. We've always been really active in terms of ESG in Russia. If you look at the statistics we have in the report, last year was 48% of all the engagements for East Capital were taking place in Russia, because there are a lot of issues in Russia. We a few to mention is lack of diversified boards, quite poor capital allocation practices. We sometimes see violations of minority shareholders' rights, overpriced placements, and so forth. So, and one of the larger engagement, would say, kind for us has been climate. Russia is the fourth largest emitter on the planet and has been quite unambitious in terms of national objectives. And we are basically East Capital and a few other fellow asset managers from abroad were the only one really active on these questions. And we did actually get, and that makes us both feel proud, but as well sad, because unfortunately this work has been stopped or suspended, but we did achieve quite a lot. So Gazprom, which is today the largest Scope 1 and 2 emitter on the planet, and was completely lagging behind in terms of climate action, pushed by us as we became the lead of the Climate Action 100+, which is an investor-led initiative to push companies around the world to reduce emissions. They basically they announced climate targets that for 3 of the divisions, equaling to 23 metric tons of greenhouse gas reductions for its peak year. And that's a huge amount of greenhouse gas emissions. And they also decided, were able to actually reduce emissions. Unfortunately, with the situation, as you said, now we stopped this kind of climate engagement. It's suspended, and what we are spending all our efforts on is related to actually the reopening of the capital markets for the sake of our clients, and we see this as a fiduciary duty, and we are just working on that kind of issues. Unfortunately, as I said, Russia will still remain the largest emitter on the planet, and we hope that we'll be able to resume these activities sooner than later.
All right, thanks for clarifying. And again, I think that ties back quite nicely to what we spoke about earlier regarding engagement rather than simply divesting. If we then look forward a bit, the asset management industry is under scrutiny currently, particularly with certain large investors being accused of greenwashing. So what do you see as sort of the most acute issue facing ESG-focused investors such as ourselves today? And how is East Capital Group ensuring that our approach remains relevant and also leading to tangible results?
Yeah, we are not surprised by what's going on. This anti-greenwashing, and partly as well green bashing now is actually something we were forecasting, if I could say it this way. The report, our sustainable investment report, starts with what we call our ESG outlook, and it's the ASAP year. And the first A stands for accountability. And we're absolutely convinced that investors such as ourselves and asset managers, asset owners have to be and to have to understand that we will be held accountable for what we say, that we need to actually do it. And it's also, of course, related to the fact that sustainable investment funds have exploded. So today, the estimate is that $1 trillion of assets under management in sustainable funds. And if you look at just 2 years ago, 2 years ago, it was 1 trillion. Now it's approaching $3 trillion US dollars in asset management of funds. So of course, if it's just about checking the box and say, well, we do ESG, but without any proper approach or without any accountability, any monitoring, and specifically any maybe very little outcome, then there will be more issues like that. For us, as I was saying, it's a sustainable investment report. We think that when you invest, you need to take into full consideration analysis of ESG risk and opportunities and sustainability. And we do that not only because we think it's important to work for positive change, but it's to support, of course, the work of creating value for our investors. So the last point I wanted to make is that in this ASAP year, the conclusion of it is that it is urgent. We are halfway to the Agenda 2030. And since you should think from 2015, when the Paris Agreement was concluded, and 2030 coming up soon. And we as investors need to be shaping outcome and not only sit and discuss and present that we think it's important to do ESG investment, but actually really help concretely to going forward to a transition to a more sustainable world. And a lot of this has to take place in emerging and frontier markets, which stand for a big part of climate issuers, for instance, or greenhouse gas emissions or other sustainability related issues.
Great, thanks, Karine. And I think that's a good spot to end on, given East Capital's large focus on emerging and frontier markets in particular. So with that, congratulations, Karine, on a great report. I should add that the report will be sent via link to those of you listening in here today, and it will also be accessible through the East Capital Group webpage. So I hope you all have the chance to read through that. In case of any questions, of course, please reach out to myself or one of your IR representatives, and we'll make sure to follow up as best as we can. So once again, thanks for listening in, and thank you, Karine.
Thank you. Bye-bye.
Bye-bye.